Hi and Assalamualaikum. My name is Zainuddin, and from our assignment, which is Impact on the Economy and Stock Market due to boycotts related to the war, I will present an analysis of Coca-Cola stock performance before and after a significant geopolitical event alongside an overview of the technology sector's company distribution. This presentation will cover both quantitative and qualitative data to give a comprehensive view of market behavior during this time of uncertainty. We start with quantitative data, focusing on Coca-Cola's daily stock prices. We collected data from two periods, January to September 2023, before the war, and a similar time frame after the war. The data consists of 50 consecutive days for both periods, and we aim to examine how the stock price changed due to geopolitical events. This table shows the daily closing price for Coca-Cola before and after the war. Before the war, price ranged between 58.86 US dollar and 62.95 US dollar, while after the war, the price dropped to a range of 52.38 US dollar to 56.78 USD dollar. The data clearly shows a decrease in Coca-Cola stock performance, which we will analyze in more detail shortly. Next, let's look at the qualitative data. This part focuses on the technology sector, identifying how many companies operate within each industry. The technology sector has a wide range of sub-industries, including semiconductors, software infrastructure, consumer electronics, and IT services. Let's look at this table. This table shows the distribution of companies within the technology sector. The software application industry has the highest number of companies, with 259. In contrast, smaller industries like consumer electronics and electronic components have fewer companies, with only 17 and 49 respectively. Here we have a bar graph and a pie chart illustrating the distribution of companies across the technology sector. The bar graph shows the number of companies per industry, while the pie chart highlights the percentage share of each sector. Software application and infrastructure dominate the sector, accounting for over half of the total companies. Now let's return to the quantitative data and examine the frequency distribution of Coca-Cola stock price. Before the war, most stock price fell between 59.36 US dollar and 60.85 US dollar. However, after the war, the price shifted downward, with the majority ranging from 54.2 US dollar to 55.99 US dollar. This shift reflects the decline in stock prices due to the geopolitical situation. I have created group frequency distribution tables to show the range of stock price before and after the war. This table provides a clearer picture of how frequently the stock prices appear within certain range, allowing us to analyze pattern and concentration points.
Hi, so these are the histograms and frequency polygons for Coca-Cola's stock prices before and after the war. The histogram before the war shows a more even distribution across higher prices range, while the post-war histogram skew towards lower price bracket. The frequency polygon similarly show a drop in stock prices, with a distinct downward shift in the stock price behavior. This cumulative frequency curve, or OGIF, illustrates the overall distribution of Coca-Cola stock price before and after the war. This steep rise in the post-war OGIF around the $55 range suggests that the majority of stock prices were concentrated at lower level after the war. Next, statistical analysis. Mean, mode, and median. In our analysis, we compute the mean, mode, and median for both pre- and post-war stock price. Before the war, the mean stock price was $19.37, whereas after the war, it dropped to $55.27. The mode also show a significant decline from 55, 59, $67 to 29, $68, and the median fell from 29.57 to 33.37, indicating that the most frequent prices were lower post-war. Before the war, the distribution of Coca-Cola stock prices was right skewed because the mean 90.375 is higher than median and mode, which are 29.57 and 59.67 respectively. This tells us that even though most stock prices are lower, the higher price values pull the average or mean up. The graph will demonstrate this as a curve that is stretched out to the right. After the war, the stock prices shift downward, but the distribution remained right skewed. The mean 55.275 was still greater than the median 33.37 and mode 29.68, signifying that despite lower price, a few higher prices continue to influence the average. The increased gap between these values reflects greater volatility in the market post-war. Overall, both periods show right skewed distribution, with a general decline in stock prices after the war. Next, skewness of data. The distribution of stock prices in both periods shows a right skewed distribution. This means that the most of the stock prices were below the mean, and only a few instances of high prices pull the mean upwards. Skewness is positive, further reinforcing this observation. So, in conclusion, our analysis indicates that Coca-Cola stock prices were negatively impacted by the war, as reflected by the mean, median, and mode. Investors should be aware of geopolitical risks and manage them through portfolio diversification. In the technology sector, software infrastructure and IT services remain dominant, representing significant growth potential. Emerging industries like semiconductors and solar are also worth watching for future investment. That's all.